Hey guys, how's it going? So this is a pre-recorded video. Well, I guess all my videos are pre-recorded. But anyways, if you are new to this channel and you just somehow came across it because you were looking at how to option trade, then please subscribe to my channel because one day I want to hold that placard that says you have surpassed 100,000 subscribers. It's like a life goal on YouTube. It might not happen. I might do YouTube for 20 years and I might just have like 20,000 subscribers. I don't know. At the end of the day, I'm not going to stop making YouTube videos, but my life goal right now is to get 100,000 subscribers. Will it happen? I have no idea, but you guys do help. So by subscribing to my channel, I don't really need a thumbs up. I just need you to subscribe to my YouTube channel. I would really appreciate it. And if you don't mind, also hit that thumbs up, but I'm not really asking for a thumbs up. I'm more asking for subscribes. So first of all, I'm gonna go over my option trading rules. So I'm gonna play this. I think these rules are very, very important. So let's play it and I'll talk more about it. So rule number 1, don't get greedy. Never, ever, ever, ever get greedy with options because it will destroy your account. You can make a lot of money off greed, yes, but you can also destroy your account, and once that money disappears, you don't have an option to play options anymore or anything because you are broke from getting greedy on options. So absolutely, my number 1 biggest rule, because I don't want to see anyone lose money. Keep this in your mind, and when you're option trading, don't get greedy. Don't get greedy. Just keep reminding yourself every day, every time you make a trade, don't get greedy. Don't get greedy. So, really important rule. Please don't ignore that. Especially if you're option trading, because option trading is gambling and very, very dangerous if you don't know what you're doing. So don't get greedy. Rule number 2. What is rule number 2? Make small bets. Never make a big bet. You can make a ton of money off making big bets, but if you make small bets, your chances of winning is a lot better. Like for example, my example is, even though I have a lot of money, every time I buy options, I only buy $500. $500, maximum $1,000. I never go over $1,000. I have in the past, and I've lost a lot of money because I got greedy and I wasn't making small bets. But if you make small bets, if the stock does the opposite of what you want, you can easily average down that position or make a new position because you think that eventually maybe it'll bounce back or maybe you think it'll crash. But whatever you want to play, make small bets and make a lot of bets, but make small bets. So like for example, in one day you can make yes, the fees are going to be expensive, but your chances of losing money is a lot less, and and if you make a lot of small bets, your chance of winning is also very great too. So that's big rule that you got to remember. And also make sure you can bring your fees down as much as possible, especially if you're making small bet. Call up your bank, find a broker that is cheap for option trading, find a way to do cheap option trades, bring down the fees, because you're gonna need to make a lot of small bets in order for you to be successful at option trading. At least my opinion. Again, none of this is financial advice, so please don't take this as financial advice. This is just my opinion. And then the third rule is, what is my third rule? Drum roll. Learn to read charts. This one is not as important, especially if you're making a lot of small bets, but it's still very important to learn how to read charts, because charts will tell you if the stock is going to go up or down. So, that's my 3 biggest rule. So let's just go to the option basics. This is not anything big or small, but the basics. So call options is you're betting that the stock price goes up. Put options is you're betting the price will go down. Just remember one more thing, that if you are option trading, sometimes you will see your option, see the money of your options go down even though you bet correctly, simply because the stock is extremely volatile and you can lose money on volatility. You can also lose money on time decay. So there's a lot of rules in option, and I don't want to really explain it, but the basic is, if you are bullish on the market, buy calls. If you're bearish, buy puts. It's that simple. It's that simple. So shorting a stock, I would prefer buying put option over shorting a stock, simply because when you short a stock, you have to borrow from somebody, and sometimes those person wants. Sometimes when you borrow those shares, that broker that you borrowed from might call you back and might be like, I want my shares back. So shorting is not something that's very easily accessible to most investors unless you're a billionaire, and then yeah, you it's very easy for you to short. But for regular retail investors, it's not that easy. So it's better to buy put options, and you actually make more money. You can make way more money buying put options than physically shorting a stock. And shorting a stock is really complicated. Well, it's not really complicated. You're just borrowing shares from somebody, and then you sell those shares short on the market. But I have tried to short Aurora stock, and I got a phone call and be like, yeah, I need you to cover your short position. They called me and told me to cover my Aurora short position. So I had no choice, and I had to buy back my short position because I had to, because that's what they told me to do. My bank, they called me and they told me to cover my Aurora short position. Kind of bullshit, but that's what happened. So. And if I wanted to physically short my Aurora stock, most of the time I would get denied by the bank. So, my bank will allow me to short like safe stocks like Microsoft or Apple or some big company that makes a lot of money. Then yeah, okay, my bank will be like, okay, yeah, sure, go ahead, short. But when it comes to very volatile stocks, and speculative stocks like Aurora or Canopy or other MJ stocks, it's very hard to short. But put options is much easier. That's why I always go put options over shorting a stock any day. Now, let's go do an example of a shorting position. So, this is for example, if let's say you were watching Carnival Cruise and you saw, oh, hey, look, it went out of the Bollinger Band. I'm going to buy a put option. You buy a put option. What happened? The stock goes up again. So if you make a small position, you can then, again, add to your put option. So you can average down the put option that you lost money on, and hope that eventually that there will be a correction, which happened. Boom. You would have made back all that money plus more if you just kept buying put options on the way up, because eventually people will take profit and the stock will go down. You're not gonna always get the right timing on options. If you do, you should be making mad money, being a billionaire right now. But and then when the stock is really down, and you think that, oh, hey, the stock's going to bounce, like right here, you think, oh, it's going to bounce. You could have bought some call options. You could have covered your put option, take that profit, roll it into call options. But there's also time where, let's say if you bought at 1744 and it does not go according to plan and it keeps going down, then you keep adding onto your call option. You gamble that it will reverse, because stocks always bounce back eventually. It gets overreacted, and then it will bounce back. And that's why charts are so important to learn how to read. And from my perspective right now, I would rather go bearish than bullish on Carnival. I think Carnival is going to go down. I would rather buy put options on Carnival than to buy call options right now, even though there's a chance it might go back to 25 bucks. If, that's why I make small positions. I make small bets. So if it keeps going up, I'll buy a little bit more put options and buy more put options. And then if it crashes and I'm profitable, I could take that profit, sell it, and then start buying call options and hope the stock bounces back. That's all you can do. You can hope. There's nothing 100% guaranteed in the market. All you can do is gamble according to what the charts are telling you. That's why it's very, very important to learn how to read charts, because it will help you out tremendously when it comes to option trading. And the better you get, the more money you would essentially make. So, that's my opinion on anybody that's curious on options. So now let's talk about all the money and in the money and at the money. So when you buy all the money, you are looking at to make a huge return if you're right. If you are right and you bought all the money, you can make thousands of % return. But if you buy in the money, you can still make money, and it's way safer than buying all the money, simply because in the money will always have value even close to expire date. So it'll never disappear, and you will always have some value, and you can also exercise it for some real money. So, for some real shares, because it's not worthless. But if it's all the money and the expire date is over, your option is basically expiring worthless, and you can't really do anything about it. But if you buy in the money, it's safer. Out of the money, you make more money, but you essentially you can lose the entire option. So again, this is the basics of in the money, out of the money. It's up to you what you want to do. You gotta remember that you also gotta take in the fact of volatility and time decay. Those are two factors you also gotta take in when you are buying option, that over time your option will lose its value, especially if it's just trades sideways or it's volatile and not going the direction you want the stock to go. You gotta remember that. That's really important. Now let's talk about Canopy growth. Right now, my sentiment for Canopy growth is extremely negative. It just recently had earnings and the stock price is crashing. I would say buy put options on it. I can't tell you that it's not going to, this is not financial advice. There's also a possibility it could go back to 1769. So if it keeps going up when you buy put options, just remember to just keep adding on and gamble, and literally gamble that the stock price will do a correction. That's why you make small bets. So the chances that it keeps going up, you can add on to your put option and gamble that one day it will have its correction. I have put options on Canopy, and if Monday comes along and Canopy shoots up to 17, 18 bucks, I'm gonna buy a little bit more put options and hope that there will be a correction in Canopy stock eventually. It may not happen, and my options might completely expire worthless. That is the gamble I have to remember that I'm taking, that I could lose my entire option position, but I also can make a ton of money if I'm right and eventually it craps out and just falls over. Then I can make a ton of money. I can make potentially thousands of percent returns because I'm betting that Canopy stock is going to crash, and I was right about it. So we'll see what happens Monday. Right now I have put options on Canopy, and I'm gambling that big money is going to sell this off and going to make it crash. But the opposite might happen, and Donald Trump could come out and be like, legalize MJ, and the stock will just skyrocket it to 50 bucks. But if that happened, you switch your option strategy right away. You go from short to long. To short, you just go buy some call options right away. So and you can only do that if you make small position. If you went out and you put all your money into Canopy's put options, because you were like so confident that canopy was going to go down. What happened if it does the opposite direction? You lose your entire position unless you sell out before you lose your entire position. But that's my strategy anyways, and I don't know if if anybody finds this helpful, but that's how I play the market. How have I been doing? I've been doing okay. I mean, I'm not doing like great. I'm doing okay. I'm losing. I would say I'm more on the losing side than the winning side. So I'm no expert. So again, this is not financial advice. I'm not gonna give up. I'm gonna keep trying and hope that one day I can do well in option trading. But right now, I'm not doing that great, but I'm doing okay. So take it with a grain of salt. Anyways, that's it for my video. Thanks for watching. I hope you enjoyed it. Subscribe for future updates and have a great